Hey everyone, welcome back to Corporate Decoder. Today we are diving into a company that's getting a bit of a shock, almost like when your phone charger suddenly stops working right when you need it. We're going to decode what's happening with ChargePoint Holdings. ChargePoint, a big name in the electric vehicle charging world, filed a report on February 19, 2025, and it's a bit of a bumpy ride. The main headline: they've received a notice from the New York Stock Exchange, or NYSE, saying their stock price is too low. Basically, the NYSE told ChargePoint that they're not meeting the minimum price requirement to stay listed on the exchange. To be exact, the average price of ChargePoint stock was below $1 for 30 days in a row. This doesn't automatically mean they're getting kicked off the NYSE right away. So what does this really mean? Well, ChargePoint has a chance to fix this. They need to get their stock price back up above $1. They have some time to do it, and they're planning to tell the NYSE by March 5, 2025 that they intend to fix this problem. They have about 6 months to get their stock price back on track. To stay listed, ChargePoint needs its stock to close at or above $1 on the last day of any month during those 6 months, and the average closing price over the previous 30 trading days also needs to be at least $1. Now, how can ChargePoint actually pull this off? They're thinking about a few options. One possibility is a reverse stock split. A reverse stock split is when a company reduces the number of its outstanding shares, which in turn increases the price of each remaining share. Think of it like cutting a pizza into fewer but bigger slices. The total amount of pizza is the same, but each slice is larger. They would need to get their shareholders to agree to this at the next company meeting. The NYSE has specific rules about this. If ChargePoint decides to go this route and gets the go-ahead from shareholders, the stock price needs to jump above $1 quickly and stay there for at least 30 trading days. Even with this notice, ChargePoint's stock will continue to be traded on the NYSE. However, they need to keep meeting all the other requirements to stay listed. This whole situation also doesn't change how ChargePoint runs its business day to day, or its requirements to report information to the Securities and Exchange Commission, also known as the SEC. To keep everyone in the loop, ChargePoint put out a press release on February 21, 2025 about the notice from the NYSE. This is required by the NYSE rules when a company receives a warning like this. So what can we take away from all this? ChargePoint is facing a challenge with its stock price. They have a plan to get back on track, but it's something investors should keep a close eye on. Now, let's zoom out and see the bigger picture. ChargePoint operates in a growing market, electric vehicle charging. As more people switch to electric cars, the demand for charging stations should increase. That's a positive trend for ChargePoint. However, the company isn't the only player in this market. There's competition, and that can put pressure on prices and profits. One of ChargePoint's strengths is its established network of charging stations and brand recognition. They've been around for a while and have a significant presence in the industry, but they need to show they can turn this into consistent profits. A weakness is their current financial situation, as indicated by the low stock price. Investors are worried about their ability to become profitable and manage their expenses. Looking ahead, there are some notable risks for ChargePoint. The growth of the EV market might not be as fast as expected, or new technologies could disrupt the charging industry. Also, if they don't get their stock price back up, they could face delisting from the NYSE, which would make it harder to raise money in the future. On the other hand, there are also opportunities. Government incentives for EV infrastructure could boost demand for ChargePoint services. Also, partnerships with automakers or other businesses could expand their reach. So, what's the outlook for ChargePoint stock? It's a bit uncertain right now. Based on their current financial situation and the challenges they face, it's hard to put a precise valuation on the company. However, if they can successfully turn things around and demonstrate a path to profitability, the stock could rebound. Considering all these factors, my recommendation is cautiously neutral with a bearish bias. ChargePoint has potential in a growing market, but they need to overcome some significant hurdles. A reasonable price range, if they execute well, could be between $1.20 and $1.50 within the next year. Thanks for watching, and if you found this Corporate Decoder episode helpful, please subscribe, like, and leave a comment below. See you in the next video.